What's up guys, welcome back to InvestingPH. The month of March was a blast for my dividends. I earned 10,511 pesos, making the total dividends received for this year to 26,752 and the grand total dividends to 159,000. It's only been 3 months this year and there are more dividends to come. 3 of my holdings have announced their payout for April. DMCI, one of the largest contributors to my dividends, announced they would pay 0.72 pesos per share. This would give a yield of 13.4% since I bought DMC at a very cheap price of 5.37. Shang also announces their payout with a record high of 0.155 per share for their first round of payout. Although I'm not sure if they would give the same amount for the second one for the year, I have a trailing 12 months yield of 12%. The third one is MPI. Although still the same amount as they paid last year, my trailing 12-month yield is 2.96%. The last one is Security Bank, the same as last year as well, giving me a trailing 12-month yield of 3.2%. So this will boost my dividends this year further. I hope I would be able to beat last year's amount of 81,259. I would love to reach 100k worth of dividends this year, but as I say, I won't force it to reach that amount. Although that is my goal, I won't chase after dividends. I'd still follow all my criteria when buying a company. It has to have strong financials, is trading at a fair price, and gives a good amount of dividends, as my long-term goal is to be able to retire comfortably with the dividends I get, because I don't like touching my capital like what the FIRE movement wants you to do, since I don't see this as a reliable way to retire properly, and since by only taking dividends, all my shares can continue to benefit from capital gains, and if there is any excess amount of dividends, I would reinvest it again to be able to grow more even while retired. That is my long-term goal in investing in stocks, but as of right now, I just concentrate on bulking up my portfolio with strong companies that pay me consistent dividends, especially right now that our market is still nowhere near recovery. A lot of factors still put fear in local investors, like what happened to US banks, though it is stated that Philippine banks won't be affected since most of the banks here follow strictly the guideline of the BSP to maintain good liquidity standards. Now, if you've seen my short analysis of banks, I always have in my valuation the loans to deposit ratio to assess a bank's liquidity. This is for any unforeseen fund requirements like a sudden big withdrawal, like what happened in the US, where everyone withdrew their money because of panic. Now, this fear was also the case back then during the pandemic, which set the stock prices of banks to drop hard. But our banks held up well stacking in cash, since during those times there may be a lot of debts that may not be paid on time. That's why even though bank stock prices back then were dropping, I was buying more and more of it, because I know they can weather what is happening. This is also a great reason why you should know the companies you are buying. Like when I'm looking at a financial statement of banks, I have different criteria to look at to determine if it would be a safe investment or not. Because if I know well the companies I invest in, this will help me maintain my composure when I'm hearing these kinds of news, unlike for a lot of investors out there, wherein every piece of negative news they hear feels like the end of the world for them. So since the negative events keep piling and piling up, the sentiment over our market is still negative, as can be seen in the PSCI. It's nowhere close to its pre-pandemic level. As for my take here, although I know these times are worrying, especially with the fear of the rising tension in the South China Sea, but what can we do about it? We have no control over those things. If we let this scare us and refrain from investing, then we are also cutting back on the potential growth this may give us in the future. That's why I just do what I can right now by investing in the companies I know are strong and can continue to grow in the future. Anyway, going back to my portfolio. As of the end of March, my total invested money is 1,754,900. And the actual value of my portfolio is now 1,968,735, giving me a total return of 12.19% or 213,836 pesos. This is while the PSE index is at negative 20.78% and the FMETF fund that tracks the PSEI index at negative 16.21%. As to why the FMETF fund is higher, because it also includes dividends reinvested. For March, I bought 2 stocks, Globe and AUB. I've been buying Globe since last month ever since its price fell below 1,900, and with that, it's now my largest holding, overtaking LTG. Now I like Globe. They've been constantly improving their services. Their earnings have grown consistently even amidst the pandemic, with a historic annual earnings growth of 13%. If you look at the breakdown of their earnings from their mobile data business, they have 86.7 million subscribers, wherein they have a revenue of 107.5 billion pesos, and a large percentage of it comes from their mobile data, which hit an all-time high of 83.8 billion, 8% higher than last year. For their non-telco services, it has grown by 106% year-on-year, giving them 4.2 billion, and in their other affiliates, this is where the popular GCash app is. Under Mint, combined accounts for 3.2% of net income before taxes. They've recorded 1.4 billion pesos, 17% higher than last year. Talking about GCash, compared to the next e-wallet app PayMaya, it is 5 times bigger with a 76 million registered users. This is why for me Globe has a very strong moat to its competitors in the Philippines. Not only does it dominate mobile services, their other businesses are already growing fast. That's why even though its stock price went down, its business is flourishing. This for me is an opportunity to buy more of this company at a discount. If you compare its price right now in its industry, in PE ratio, it's the cheapest. PLDT is now trading at 26.5 times earnings, Converge 12.5. Dito has negative earnings, that's why it has no price to earnings ratio. If you look at price to book, also the cheapest of the three, only trading at 1 times its book value. And the best thing about Globe is it pays a good amount of dividends, so while waiting for its stock price to go up, I am still earning money consistently. Its dividend yield for its price right now is 5.5%. That's why it's a very attractive buy for me, and I know Globe would continue to grow more in the future. By the way, if you're curious as to where I get all this data, it is from Simply Wall Street. It has tons of data available for you, from local to international stocks, so if you're new to investing, this would be a great tool for you to analyze companies easily because of how well organized and understandable they present data for you. From graphs, comparisons, and a lot more. They also give you an update on the important reports of the companies in your watch list, from earnings release, dividend payout, and insider buying or selling. And that's not all. They also have a portfolio tracker that can help you assess the overall health of your portfolio. And also one important factor to include when buying stocks is if it's undervalued or not. They also have a computation for you. But of course, don't just simply rely on this one. You have to combine this with all your research to determine whether or not it is worth buying. So if you want to try this platform out, head down to my link below. They offer their basic plan for free, and if you avail their paid plan using my link, you can get up to 40% discount. So what are you waiting for? Try Simply Wall Street. Going back to my portfolio, if I group my stocks by sector, holding companies still takes up the largest share, 25%, real estate 16%, banks 15%, REITs 12%, and the technology sector, which is solely Globe, 11%, and the other sectors only take up less than 10%. And going back to my dividends, by the way, with the help of Simply Wall Street, I've now computed my trailing 12 months income, which is from March 2022 to March 2023. It's at 106,000 pesos. It's this high because March is usually one of the highest months of dividend income, since some of my largest holdings give out this month, like Aboitiz and LTG. And for my average monthly income, it's at 8,849 pesos. This is already after taxes. So that's about it for this month's update. To end this video, I share a quote from Warren Buffett. A market downturn doesn't bother us. It is an opportunity to increase our ownership of great companies with great management at good prices. This is for those who are attempting the impossible, timing the market. A lot of us are complaining that our market isn't moving. It's been like this for a long time. But this actually is the best time to grow your money. You just don't realize it yet as of now. If you miss this opportunity to buy those companies at a discount, you would be disappointed in the future when the market does climb back up again. It happened already back then. The Philippine market had been in this state as well, but if you just stayed true and bought good companies consistently, you would have been rich if you invested during those times when the market was very cheap. Same as today, although we have no clue when it will climb, but if what you're investing in is a good company that will continue to grow, it's just a matter of time. And the best part of it, while waiting, you are still earning dividends. There are still ways to earn money even while the market doesn't move. You just have to know the right companies to invest in and don't blindly follow what you hear in the news and social media. So I hope you've learned something from this video, and if it did and still haven't clicked the like button, I'd appreciate it if you do so before leaving. And if you haven't tried Simply Wall Street, try it now. There's nothing to lose. Thank you and see you in the next video.